Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So I don't know if you've noticed, but when I do the lessons, I try and pick out lessons that I think are appropriate for the potential, either the environment we're in or where we could be going. And in today's lesson, I want to talk about a 1, 2, 3. Now, I'm going to show a specific setup that is a little bit different. Usually when I'm looking at the 1, 2, 3s, it's in relation to a trend. This is going to be more of like a trend reversal and showing how to potentially take advantage of a reversal at a bottom. So let's just look at the agenda. I want to go through again the 1, 2, 3 change in trend. I'm going to look at a trend line break first and explain that. I want to go through and give you the different ways we can form a test of the low, and then finally what is the confirming signal, and how we want to use this in multiple time frames, which is incredibly important. And then after that, we'll go through the symbol requests that came through. So let's go ahead and get into this lesson now. Okay, so as we talk about this 1, 2, 3, I thought I'd use a different stock. A lot of times I'm using Apple or Microsoft. I figured I'd go off the beaten track a little bit and even find a stock that is not trending to show the value of this 1, 2, 3 pattern and how it can be used in multiple time frames. So let's just start with this IBM, and I'm gonna expand the weekly for a second because I've drawn in this box underneath. You can see there's a significant amount of support down in the 120, low 120 area. Okay, I mean, it overran it a few times, no question, got down underneath here. But you can see the amount of reversals in and around this area. And so we want to be aware of that when a stock is coming down into a zone. I'm not a big believer in levels, but I'm a huge believer in zones. All right, and when you draw in your support levels, draw in support, draw it as a zone and not as a specific price point. That's my opinion. It's how I like to use it. I don't want to get caught up in looking for an exact level. And same thing would hold true on the top here. I mean, I can look at this and kind of draw this across and say, I've got this sort of zone of resistance up, 145 to 150. All right, we're meeting that now, but what I want to do is discuss this area down here and how we might be able to take advantage of this if we understand 1, 2, 3, especially in multiple time frames. So, let's go ahead and zoom this out. All right, so I've got this pattern dropping down. All right, and I've made a lower high and a lower low. So anyone, I go through this in my course in detail. In fact, I go through this whole sequence in detail in the course that I have online. And what we notice here is once we make a lower high and lower low, we can draw on a trend line. All right, and when we connect, this is our anchor point, making the lower high, and then we go and use the peak of the move that doesn't pass through prices and draw it and connect it and move it forward from there. And we can see that we actually violated that line. Now, we didn't violate it by much, but we violated by enough to be considered a trend line break. And the thing is that the one, that's the one in a 1, 2, 3 change in trend is not as valuable as you might think. A lot of people like to take trend line breaks and use them as operative buy signals. Most of the time, I'm not saying I don't, but most of the time I would say that I don't. All right, I'm typically looking to play the 2, the pullback and the move back to the upside, but we need other evidence if I'm going to play this. In this specific case, we broke the trend line and then we came down, kind of sharply turned back to the upside and made an attempt at getting through here, but we did not do it. All right, so 2 would have been the test, 3 would have been coming back up through here. All right, that's our 1, 2, 3. Now, that didn't happen, and instead we made another lower low. So I'm viewing this as 1 is the trend line break here. This is the 1. And then we're still in the process of making a 2. Even though this undercut this low, I'm definitely a believer that this is still a part of a 1, 2, 3. It's just we have to get back above this line to turn the trend back to the upside on this daily chart. All right, this is on a daily. But what I do know is that I've broken the trend line and now I've come back to test. Now, if we have momentum, I don't want to get into the momentum on this video, but if we know that like the ADX is not showing a lot of strength on this drop, we can be even more aggressive. But if I know that I'm just barely undercutting this bottom here, I can now go down to the smaller time frame, and what I've done is I've moved this chart over so I can see this time on this chart. That's right here. All right. Now, we've dropped down, we've undercut this low, we're in the zone now, but we do know that we've already broken the trend line. So we've somewhat weakened the downtrend. We've weakened the downtrend a little bit, and now we've come down to test this area. Now, it's no given that we're going to definitely turn to the upside. So I don't want to just immediately buy the moment this comes back up. I need evidence, and evidence comes in the form of a 1, 2, 3 on this time frame. So if you notice, I've got the 1, 2, I'm on a 2. I think I'm on a 2. I don't know for sure, but I think I'm on a 2 on this time frame. All right, I'm not waiting for the 3 and then going down to the smaller time frame. I want to look at it when it looks like it's forming the 2, especially if we've got this little mini undercut taking place. And now I want to look for evidence of a shift in trend here. So you could draw this trend line, you could use this trend line. They're both the same. They're going to give you the same piece of evidence because this is the anchor point. This was the new low. This was the low of the move. We go back to the previous peak, and that's our anchor, and then we draw a trend line through prices without any other prices being violated. And so we can draw in that trend line right there using that. And so I'm just going to put this up. Now, what we do on this time frame is we push up and then we immediately make an attempt on getting through, but we do not. We fail. Okay, so again, I've got this line going across. Until we get through that, there's nothing to do here. All right, I don't want to pre-guess, especially when I'm trying to make a bottom. All right, now when I like to take the 2, so if I want to take this 2 trade, it's usually in the direction of the trend. Like I've got a trend in place on the higher time frame, and I want to play a pullback in the direction of the trend. But in this case, I don't have that. I'm trying to buy off of a low counter trend, looking for a reversal in support. All right, so in this case, I want to definitely make sure this gets the 3. This is the 3. So this was a temporary 2 right here on this low, and then we went up and failed, and then we made another 2 right here that was much better. Came down and tested this low, tested the trend line, and then when we get this 3, now we know that we've shifted the trend. Now, I actually think an even better setup might be waiting for this little higher low, a test of this area, and making the higher low once this turns up. You're still in under 122. Keep in mind, 122 on this time frame. On this chart, let me just show you where that is on this chart. That's literally right here as it's coming back up through this low, 122, right at the top of this little zone area that I've drawn. So if we buy anywhere here, and even if we waited for a little bit of confirmation, there's nothing wrong with taking the 3, putting your stop down here at 119 and having your stop in here and saying, all right, I'm buying in the zone, and I'm looking to play this for a move up into resistance, which really is up around 145, 150. Now, you don't have to play it for that big a move, but this is how you can get in with incredibly low risk. I mean, this is very, very small risk. Buying at 121-ish, 119 stop, you've got a 2-point risk. That's a 2-point risk. Essentially buying here with a stop here. In fact, it's a little bit above that. If you wanted to put it underneath, there's nothing wrong with that either. And then playing for a move maybe up into resistance, say something like up at 130, 132, something like that. The risk reward is excellent. So use this multiple time frame approach to the 1, 2, 3, and I think you're going to find you have a lot of opportunities to play stocks that don't necessarily look like they're in a strong trend. So we might be in an environment coming up where we're kind of trading in a range, something like that. So I want to make sure you understand how to be able to play this. Now, on the downside, we've got, I mean, the potential downside, we've got this trend to the upside. We're getting close to potentially violating it. And as I mentioned, we're up into this resistance zone. Now, it's not the same. We don't have any more evidence yet. And it really is little bit of a, now I guess that is a trend line break. We've got a trend line break taking place, but we need the two to form up in this area. And then as we do that, then we can go to the smaller time frame and look for some kind of a reversal pattern. As I say, a 1, 2, 3. And we want to focus on price and then use the indicators that help us confirm those signals. All right, so keep these things in mind, especially if we go into a more prolonged trading range environment. If you're enjoying the content, hit that like button and also subscribe. And just briefly, if you're interested in learning more about trend and momentum in multiple time frame, you can go to rabilstockresearch.com/book. I've got my information on the book there. I'm selling it right now at a discount in a PDF format. So if you have an interest in learning more about some of the things that I talk about in these lessons and when I go through the stocks, check that out. Okay, so I've switched my layout now that I'm going to go through the analysis. I like to have the hourly up as well, and I've got a big monthly, big weekly, a daily chart, and then an hourly, and then over here. So I wanted to point this out. So the only chart that has the zigzag indicator on it is up in this top left, and just to point out, if you want to use that. The way I was showing it in the lesson, this is how it's set up. I've got percentage 5. I've got an auto percentage set. It's important. And then multiplier is 2. It comes by default at 2.5 on their setup. And then I do use the high-low off the close. And so the reason why that's important is if you use the auto percentage, what it's going to do is it doesn't matter the time frame. It's going to auto adjust this thing so that it finds each swing on each time frame. So you don't have to change the parameters. You don't have to use a different percentage or anything like that. It's a really great way. They did an excellent job. I've used probably 5 or 6 different software packages related to charting, and this is the best zigzag that I've ever used. So I wanted to point that out if you want to include those. And I do recommend, and I talk about that in my course, if you want to really learn the trend in the 1, 2, 3, I think it really helps having the zigzag up to start. Now, I don't use it most of the time, but I do have it on the weekly chart just so I can see the key levels of support and resistance. Okay, so I have the spider up, but I'm actually not going to talk about the spider. I do my YouTube channel on Friday morning. I go through the spider in depth on all the time frames, and I go through the market conditions and everything. So if you want to check that out, Invest Like a Pro or Joe Rabil, you should be able to find it. But I want to talk about the QQQ. So here's the reason why, if you've noticed what I've been doing when I look at the indexes, I've been looking at the QQQ and the IWM. So I want to look at the strength, what has been strong, and then I want to look at what's been weak. All right, we kind of want to see who's been winning and who's been losing and how they're doing. And let's see if that gives us any more information. Now, the QQQ, I think, our big problem with this is that it's stretched from the 18-month and it never tested it. All right. Most of the time when you cross the 18-month, you come back and you test these lines, and then you can start an uptrend. But when you blow it out to the upside and you go straight into resistance and you haven't tested this line, it leaves the potential for more consolidation. And I think that's what we could be in for. It doesn't mean we have to come down to this line, but we need to spend some time consolidating while this line cups around a little bit and at least turns upward and closes the gap a little. It's just a little too far. Now, we could come down a little bit and this could come up a little bit and we could meet somewhere in the middle. It might be a good idea to draw in the fib grid and put in, from this low up to this high and look at where the 38% retracement is and the 50% retracement. And that'll give you a nice zone to be on the lookout for as to what to watch, right? But right now, I think the key is as we go into the smaller time frames, let's look at the weekly. What's taking place right now is pretty important. We're breaking the 18-week. And I actually want to show this in a different format. I want to show you. So we're breaking the 18-week on this chart here. This is a weekly chart, and this is an 18 right here. This is the 72 week, which is essentially the 18-month line. All right, this it does a really good job of mimicking what the 18-month is doing. So if you notice, look at this open air between these two MAs. You've got the 18-month here and the 18-week here. We've got a lot of room here. It's to me, that's risk. All right, that distance is risk. Whereas the 18-day and the 18-week, there wasn't much risk. But now that we're breaking this potentially, and we haven't really done that unless we come back down through this low, I think, or maybe if we take out the low of this bar next week, you get a little bit more confirmation. Point is, there's weakness taking place, and we are violating this line right now. And the potential for a deeper drop, I think, is out there. And so I don't think we come all the way down to this line. But again, if you draw in the fib grid, you take it from here up to here, you're going to get a 38% retracement and a 50% retracement line. Now, give you an idea of what zone to be on the lookout for a potential turn. That's how I would look at that. The other thing I would mention is just keep an eye on this RSI 5. If this thing gets down, it'll get down under 30 likely on this pullback, but if it gets down under 20, then you know it's getting really, really overdone in the short term, and you could get some kind of a bounce off that. So keep an eye on that as well. That could be helpful. Okay, so here's the thing that's been developing when we look at the indicators. We had the parallel line. This is out of my course, parallel lines developing. The MACD's lines are going in one direction, and price is kind of forming a little bear flag almost. And you can see the 18 and the 4 are basically parallel here as these are going in the opposite direction. So again, I don't like that pattern. Now, it is tempered by the fact that we're showing a lot of strength in the momentum based on the ADX. So I don't expect this to fall apart and just, cave in to the downside. But I would classify it as a correction, and the main reason is that we never checked out the 18-month on this time frame at all. So we've got that. We've also got some pretty big volume developed over the last couple of days, and now a new gap today. So next key is testing out this key support from 354, 355 on the Qs, I think is something to be on the lookout for to see how we react, because that really is the 1, 2, 3 on this time frame. So that's the 2, and now the 3 is coming down through here, and that's because this was such a big drop off this peak. So that would be a little bit more confirmation of a break of the weekly line. Okay, let's look at the IWM. So we looked at the strongest area, which has been the QQQs in terms of indexes. Now we're going to go to the weakest, okay? And this has been a concern that I've talked about for really a couple months now. And that's the fact that this black line is the relative strength of the IWM versus the S&P, all right? It's below its moving average, meaning the trend is down on this indicator. Well, it's hard to get really bullish with this indicator rolling down like this and this actually hitting another new low now, right? I mean, you can't get overly bullish when the broad market is weakening. All right, this is essentially the broad market. So I've done this for a long time. I work with small cap managers for ages, going back, small cap managers for a long, long time. I've looked at this relationship for a very, very long time, and it's not a good situation when this line is going down and underperforming the market. So we've got to keep that in mind. Now, as we look at what's going on the chart itself, I mentioned this a few weeks ago, the break of this 180 level I thought was real important, breaking both moving averages, and now we have to start thinking we're going to work our way down to the lower end of this trading range, because it's essentially a trading range with resistance up near 200 and support is down, right around 170, maybe low 170s, something like that. That's what I would be watching for on this index, just based on how it's taking place. Now, again, use this RSI 5 because if we get down and oversold, we're already at 28 on the RSI 5 weekly. If this wants to come down under 20, you probably want to be on the lookout for some kind of an interim rally. Doesn't mean it's going to reverse, but it could have some kind of an interim rally. Just kind of be on the lookout for that. Now, what I wanted to do, I've talked about the strongest, I've talked about the weakest. Now, what I wanted to do is talk about some leadership areas. XLK has been a leadership area. It's been one of the stronger sectors. All right. And then I'm going to talk about a subcomponent of XLK that's also been one of the leaders. And I'm going to show you what's going on and how this is giving us a lead into, more corrective action. So we've got this parallel lines pattern developed here on this chart. We've got a lot of strength in the ADX, same thing. So I'm classifying this as a corrective pattern, all right? That means that I'm sort of expecting it to stay inside this channel. Typically, that's what you'd expect. But this still has some decent room before it comes down into that area. And I think most likely is we could bounce up and come back down. It might just take some time because this probably needs to work its way down closer to the zero line. So one of the things I wanted to mention is we closed below the 18-week last week, and then we took out the low of that. So this is more of a confirming evidence of a break of the 18-week, even though we haven't formed, a little bit of a completion of the 1, 2, 3 by taking out this prior low. A lot of weakness in this pattern. One of the things that we always want to look at is the daily gives us kind of evidence of strength. You see this move? Look at the ADX strength here. You see how green is causing the blue line to stay well above 25? And then we had a decline phase, and there really wasn't a lot of strength in the sellers. So we should have had an upward bias for this move. But then look at what happened. This made this strong move to the upside, and ADX couldn't really get above 25. It got up and it just dropped right back down. So that's not good. That's not a good sign, and it's more of a sign that this trend is tired. And again, we're going to probably come down and test this low, but there's certainly a decent amount of weakness developing. And if you watched your daily 5 that I did on Tuesday, you know that I was looking at Apple, Microsoft, Google, Amazon, and NVIDIA. Almost all. Google was really the only one that didn't have any confirming evidence, but all the others had pretty strong evidence that they wanted to correct. If those stocks are going to correct, then this is going to correct, and the QQQ is going to correct. So you just got to be aware of what's going on in those big names. All right, let's look at the SMH real quick, because again, this is an area that's been really strong. Well, this had the exact same weekly pattern with the parallel lines, counter parallel lines, but we clearly had a bad week where we got below the 18-week and then follow through this week. The individual stocks turned down into corrective patterns. A lot of the big names like Applied Materials and KLAC and some of the stocks like that I think are in corrective patterns right now. But because the momentum is strong on the ADX basis, we should be expecting support underneath. Okay, let's get into some individual stock requests now. So this GSM, I think, I'm intrigued by what's going on here, but we're rallying into a declining 18-month. We're not showing enough of a shift yet. And because of that, I'm willing to look at the weekly chart and say, if we can break out here, kind of get back above this key area. And I'd want to see it with a vengeance because we do have a low ADX condition on the weekly. Then in the process of doing that, we're going to break above the 18-month, and we could have a decent trading move in this that could work its way up, maybe even towards 7.5 or something like that. But don't pre-guess this. Don't jump the gun. We need this to get back up above this prior high, and I want to see it do it with a vengeance, with some real strength. META, so look at this parallel lines pattern on the weekly. See that? Now look at the distance we have. Look at all this open air between the price and the 18-month is down at under 200, right? There's a 100-point difference here. We made this huge move and tried to V-bottom. Well, now we got to go through and pay the piper a little bit. Now, it doesn't mean we're going to come down to 200, but this is going to work off some of the steam. It needs to digest some of the gains, and I think a break of the 18-week will help do that, maybe coming back down towards 275. Look at what happened to UAL. This is a bit disturbing, okay? Because on a weekly chart, we showed pretty good strength here, moved to the upside. We had a decent pullback, a sharp pullback, and then it made another move to another new high and tried to break out of all this, and we had really good momentum confirmation, but look at the decline phase. So when I talk to my subscribers, I'm always talking about, look, we want to buy a pullback here, and we want to make sure the pullback holds. Well, this did not hold. So I'm really disturbed by the fact that this re-entered the breakout, rebroke both of the weekly moving averages, and we have a lot of strength. Look at the ADX strength on the daily chart. Not really what we want to be looking for. Okay, Netflix. So this is breaking the 18-week. Okay, now let's look and see how far we are. We're not as far. Do you see how this is not as extended as Meta is? This started to pull back and pause at the right areas, right around the 50% mark. So I don't think this has as much room to fall. I think there's going to be some decent support. I'd probably be thinking somewhere around 360 or something like that. I mean, I think there's a little bit more short-term risk, but not the type of time that is needed in some of these other big names. Let's look at DKNG. So I actually like the way this is setting up, but it just hit the 40-month moving average and it's starting to pull back. So let's look for this and see how this handles this area. Maybe it goes sideways for a little bit. A break at the 18-week means there's nothing to look for on the daily for an entry or anything like that. Thanks for watching the show. My research can be found at rabilstockresearch.com, and my YouTube channel is called Invest Like a Pro. Everyone have a great week, and we'll see you next time.